Dear all, a very good evening to all of you. I am Kajal Wahi on behalf of the team TechSo. Welcome all the attendees today to our fifth session of GST Masterclass. As you may be aware, the GST Masterclass is a platform where we do monthly webinars on practical GST issues and for members to get their queries resolved from GST experts. Also, we have the Texo app that we are offering real-time updates and due dates of GST, income tax, PF, ROC, and ESI. Today's session is a special one as we have with us CA Atul Gupta ji, past president of ICI and expert in indirect tax that needs no introduction. I would now welcome Atul sir and request him to enlighten us on the topic for the day, essential compliance in GST for the conclusion of financial year 2022-2023. Sir, please welcome.
Yeah, thank you, Kajal. And at the outset, I am thankful to the team Texo for giving me the opportunity once again, wherein we are going to discuss the very important topic related to the GST, that what we have to do on the 31st of March, vis-a-vis in the first month of April of the next financial year, that is the April 2023. So, my dear friends, as you are aware that the financial year is about to close, and there are many things which, as per the GST norms, the provisions and the rules and the procedures that we have to see that we are complying with, so that there should not be any kind of a procedural gap or something we are missing, and which will impact our compliance level, not only the compliance level, but also may attract the interest and penalties in the times to come. My dear friend, I will be discussing about the 20 such aspects which you should take care. So you may note down all the 20 points, only just 1, 2, 3, 4, 5, and maybe gradually you will be able to comprehend them with the passage of time. The first one out of the 20 points, which is very, very important that we should be aware of. Number one is the e-invoice applicability. My dear friend, as you are aware that in case your turnover is more than 20 crores, in that particular case, you have to follow the e-invoice system in your organization, and specifically for the B2B. So, my dear friends, say for example, in 2022-23, your turnover was more than 20 crore, but it was the first time it crosses the 20 crore limit. So, from the next year, that is from the 1st of April, you have to follow the e-invoice system because your turnover is more than 20 crore related to the business B2B sale is supply is there. Then you should see that you are adhering with the e-invoice requirement and you are complying. You are taking on board any application, whichever is serving you or providing you the e-invoice facilitation. So one point is that for all the SSCs having more than 20 crore of rupees turnover in the preceding financial year, then they have to have the e-invoice system to be applicable. Second one is about the B2C QR code. You are aware that in case SSC is having a more than 500 crore rupees turnover, then even not only the B2B, but also for the B2C, they have to have the compulsory QR code on the invoices. So, my dear friend, in case your turnover crosses the last year, the more than 500 crore threshold, in that case, even your B2C invoices are subject to the QR code that will be a mandatory requirement. So, please take care of this aspect that from the 1st of April 2023, you are following the QR code even on the B2C invoices in case your turnover is more than 500 crore. My dear friend, you are aware that for the exports, there are the two mechanisms that in case you want to do the export by paying the IGST and then claiming the refund from the department, this is one way. The another way is that you are not paying any GST on the output supply and you are filing a LUT. And in that case, you are not supposed to pay any tax on the output activity, whereas you can claim the refund of all the input tax credit you paid to meet up your output that is the export. Now, my dear friend, in case you are opting for the LUT, then you have to file a LUT, which is supposed to be filed in the month of April, but already the functionality has been started by the department, and you can file your LUT even today also, so that from the day one of your invoice, you are complying with the LUT requirement. It should not be a case that, okay, you are waiting to file a LUT, and suppose 3rd of April you want to do an export, and then suddenly you have to file a LUT. So better is that even today also you can file a LUT for the year 23-24, financial year 23-24. My dear friend, the next one is about the composition scheme, that in case you want to opt out or opt in, there are threshold limit. In that case, if your turnover is more than the threshold or for the related to your goods or you are into the services, then the threshold is there for the composition scheme, that okay, up to that turnover, you are not supposed to, you are eligible to opt for a composition scheme. Or in case you want to opt out for the composition scheme, then also you have to give a declaration. So my dear friend, that is the point which is will be applicable from the 1st of April itself. So in case you want to select for the composition scheme of yourself or for your any SSC, in case my professional colleague is listening, in that case, you have to remember that the composition scheme, whosoever is dealing in the composition scheme, they have to opt in or opt out as the case may be. My dear friend, in case of an invoice, you are aware that we have to intimate the series which we are following in the invoice. And in case from the 1st of April 23-24, for the 1st of April 23, you want to change your invoice series. In that case, you have to intimate to the department that, okay, which invoice series you are going to follow. And that is something that you need to decide today itself, that today or tomorrow. And then you have to intimate to the department that from the 1st of April, whichever the supply will be there, that will be followed with this particular invoice series. Now, my dear friend, coming to the 6th aspect which you should take care is about the HSN requirement. As you are aware that in case your turnover is more than 5 crore, then you are supposed to give the 6-digit HSN on your invoices. Whereas in case your turnover is less than 5 crore, then you can continue with the 4-digit HSN. So, my dear friend, you have to decide with your various SSCs. If you are listening as a professional or if you are the SSC, you have to take care of this aspect, that in case your turnover is more than 5 crore, then you have to opt for a 6-digit HSN code. So, accordingly, you should be aware of that, okay, whichever the product or the services in which you are there, you have to follow that particular 6-digit HSN. I'm talking about the product specifically, that you have to decide the HSN of the 6-digit of your relevant product, whatever you are providing. Now, my dear friend, coming to the 7th aspect, and which is, I will say that I covered many times with the various programs, is about the ITC. My dear friend, I just give you an example for the better understanding that my turnover is, say for example, my turnover is rupees 10 crore, and out of that 7 crore is taxable and 3 crore is exempted. So what will happen that on a month-to-month basis, what I will do that I'm talking about this annual turnover. Now, what happened in the month of April 2022, remember the date which I am sharing with you, that April 2022, say for example, out of this total annual turnover of rupees 10 crore, my April turnover was only 70 lakhs, and in the 70 lakhs, my 40% turnover was exempted and the 60% turnover was taxable. So what would have happened, that whatever the credit was there with me in the month of April 2022, I must have taken only the 60% as a credit of the common. So you are aware that we have certain credits which are exclusively related to the taxable and the exempted. So what I will do, I will take the 100% of the taxable and I will reverse the 100% credit related to my exempted activity. But when we are talking about the common credit, that is called C2 in the GST language. When we are talking about the common credit, that I have to take the credit in the ratio of my taxable vis-a-vis the exempted turnover. So my April 2022 turnover was 60% taxable and 40% exempted. So let us assume that my credit was in that month, common credit was 2 lakh. So out of the 2 lakh, I must have taken the 1,20,000 rupees as a credit, and 80,000 rupees credit I must have reversed. Now, my dear friend, this will go on a month-to-month basis from April to March, April, May, June. Every month I will do this calculation based on the ratio will not be fixed. Ratio will be the month turnover. So what I will do, I will claim many times 40%, many times 45%, many times 30% or 20% as the case may be, based on my turnover of that month. Now, my dear friend, let us assume that in the entire year, since I mentioned you, my national annual turnover is 10 crore. Finally, for the year 22-23, my annual turnover is 10 crore. Out of that, 7 crore is taxable and 3 crore is exempted. Now, I should have reversed the 30% credit of the overall common credit. So let us assume on a month-to-month basis, the common credit was, let us assume 30 lakhs. But because of the different ratio I followed in the entire year, I reversed 40%, meaning thereby the 12 lakh rupees credit as a credit related to my exempted activity out of the common credit. But I should have reversed only the 30% because my turnover, the national annual turnover is only 70% taxable and 30% exempted. So I should have reversed 9 lakhs, whereas on a month-to-month basis, I reversed 12 lakhs rupees. My dear friend, as per this rule 42, now on the 1st of April, I have to do a revised calculation. And this date from 1st of April to 30th of September, the time limit which is available to us is from the 1st of April to 30th of September. So what I have to do? I have to do a reverse calculation. I have to recalculation. And based on that, I will be eligible to claim 3 lakhs extra credit, which I reversed as a portion of the exempted turnover on the common credit in the entire year. So 3 lakhs rupees additional credit will be available to me, which I can do a recalculation and intimate to the department through the GSTR 1 and 3, GSTR 3B that, okay, this is the additional credit which is available to me. The situation may be a reverse situation that I reversed only, say, for example, 15 lakhs, but based on my annual turnover, my ratio came in such a way that I should have reversed 20 lakhs rupees. So, my dear friend, what will happen that if you will do this calculation today itself, meaning thereby on the 31st of March or 1st of April, that you should have reversed more 5 lakhs rupees credit, you should do immediately on the 1st of April, because after the 1st of April, though the window is available up to 30th of September, but you have to pay this reversal, you have to do this reversal with interest. So that's a very, very important point that, okay, the assessee has to see that in case we are dealing in a taxable and exempted turnover, then whatever ratio you followed in the entire year on a month-to-month basis based on the monthly turnover, that need to relook at the end of the year with the final turnover ratio that, okay, will come after the closing of the balance sheet. So my dear friend, this is something very, very important that it will save a lot of interest for the assessees who are dealing in the taxable and exempted turnover, and they have to follow the rule 42, which is the need of the hour. Now, my dear friend, there will be another aspect related to the ITC. I have the 3 points which we should be discussing on the 31st March. The second point is about the ITC is about the reclassification or the capitalization of the asset. My dear friend, there will be a situation when you will be, say, for example, you have certain assets which are not capitalized earlier. They are in the WIP stage. Now you are doing a capitalization of the asset, or there may be a situation that earlier this capital goods was used for the taxable activity and now it will be used for the exempted activity in the times to come, and vice versa. So there may be a situation when the capital goods will be getting transferred from one situation to the another situation, one kind of a business to the another kind of business. And for that, you have to do a recalculation, and that necessary journal entries has to be passed along with the GST return. You have to intimate in the GST return that, okay, this is a reclassification of the capital goods, which is happening, or I will say that, okay, I am doing a capitalization of a certain asset. Now, my dear friend, the 9th point which I wish to share with you is about the stock or the asset write-off. Now, you will be preparing a fixed asset register. Now, in the fixed asset register, you will be finding that during the year, you have written off certain asset or written off certain stocks on which you claim the input tax credit whenever you purchase them. Now, my dear friend, for example, section 18 subsection 6 talks about that in case you are using any capital goods on which capital asset on which you claim the input tax credit, and if you are disposing of, you are writing off, you are selling that asset in less than the 5 years prior to the end of the 5 years, meaning thereby the life has been taken as a 5 years, and if you are disposing of that asset within that 5 years, then you have to reverse the portion of a credit over the transaction value, whichever is higher. So my dear friend, I will request you that in case there is any stock write-off from the stock register, or there is a capital goods, a capital asset getting write-off from the fixed asset register, then you have to ensure that the related compliances of the GST related to that write-off should be taken care or not. This is again a very, very important point. Even the auditors or even anybody who is finalizing the balance sheet should see that, okay, when you are doing a due diligence. So what I am trying to convey you, I am giving you the due diligence of the GST for the year-end balance sheet which you are preparing. Now, my dear friend, coming to the next part is about the builders. The 10th part is about the builders that the builder has to do. Now, you are aware that when I am doing a residential project, you are aware that the rate of tax is 1% or the 5% as the case may be. For affordable, it is 1%, otherwise it is 5% with a no input tax credit benefit available. But at the same time, the builder are supposed to buy only from the registered dealer and at least to the value of 80%, meaning thereby the builder are supposed to buy the raw material, the stock, the cement, steel and everything, whatever they are buying, that the minimum 80% should be from the registered dealer. In case, say for example, my purchase, the total purchase is 100 crore and out of that only 75 crore is from the registered dealer and 25 crore is from the unregistered dealer, then I have to pay the tax under reverse charge to make this purchase 80% from the registered dealer, meaning thereby I have to pay the GST on under reverse charge 45 crores. Say for example, the rate of tax is 18%, so I have to pay 90 lakhs rupees under the reverse charge mechanism. So my dear friend, this is the point which the builder has to take care, that in case they are closing a particular project in this particular financial year, and in case their purchase is less than 80% from the registered dealer, then they have to do this compliance of paying the GST under the reverse charge mechanism. Now, my dear friend, the next 10 points which I am going to discuss is about more of a diagnostic review. That, okay, in case you are finalizing a balance sheet of an organization, or yourself working in an organization and you are finalizing the balance sheet as a CFO or as a manager accounts or something like that, then what are those 10 points are there which you should be aware of, that, okay, I have to see the compliances of the GST for those aspects. Number one, that the reconciliation of the books of accounts with the GSTR 1 and the GSTR 3B. So it's obvious, everybody is aware about, so but just I'm giving you a checklist, otherwise everybody is aware about this aspect. So the first point is the GSTR 1 and GSTR 3B. That should be a reconciliation with the books of accounts, and in case any reconciliation statement is required, like a BRS, the bank reconciliation statement we used to prepare while we are studying. So similar way, you have to prepare a reconciliation with the GSTR 1 and the GSTR 3B with the books of accounts which you are finalizing. Now, my dear friend, the another aspect is about the e-way bill and the e-invoice reconciliation with the books of accounts. Many times you will find that the stock register is saying that you purchased so many goods, but the e-way bills are not available. So this is another point which the stock register should be matching with the e-way bills in case all the purchases are through the e-way bills which are there, or in case there are certain purchases are not falling under the requirement of the e-way bill, then also you should have the proper documentations available. The availability of the invoice for all the purchases should be again a second point which you should be considering while you are doing this all the GST compliances check. So whether as per the you are aware, as per the section 16, they have given us that in case you want to claim the ITC, there are the 5 eligibility criteria, and out of that, one eligibility criteria is that you should be having an invoice or a tax paying document. And when we are discussing about this, these are the 4 documents which I am talking about. Are the requirements that any one of them should be there. Number 1 is the invoice. Number 2 is the reverse charge. In case of a reverse charge, a self-generated invoice. Number 3, the bill of entry in case of an import. And number 4, the invoice received from an ISD distributor. So my dear friend, it is very important that any one of them should be available, and that should be matching with the books of accounts, that, okay, whatever the purchases are there, I have all the invoices related there too. And specifically when I'm talking about the purchases, I'm not talking about the financial purchases. I'm talking about the purchases related to the GST. So if the ITC register is showing that, okay, I have this much of a credit available, all the invoices related to the ITC register, which are duly valid as per the notification number 39/2018, should be there. That all the ingredients on the invoice should also be there. and that should be matching with the ITC register. Now, my dear friend, the 13th aspect which I wish to share with you is about the TDS and the TCS reconciliation. That in case you have deducted certain TDS or the TCS, and the ledger accounts are showing that, okay, this much of amount has been deducted, the corresponding entries related there to the journal entries vis-a-vis the returns should be getting reconciled, so that it should not be any miss, or there should not be any gap between the ledger accounts vis-a-vis the TDS and TCS returns, which you deducted at a different occasion. Now, my dear friend, the next one is about the GST payable. The 14th point is about the GST payable and the ITC reconciliation, ITC balance reconciliation. My dear friend, it's very, very important that not only we should have this kind of reconciliation, but also you are aware that now they have introduced, the department has introduced the requirement of a T1, T2, T3, T4 like this. So you are aware that whenever you have the total ITC available in your 2A, 2B, and that has to be segregated in the different type of credit. That is, T1 means that the credit related to your personal or a non-business purpose. The T2 is a credit related to your exempted activity. The T3 is the credit related to your block credit, and T4 is the credit which is exclusively related to your taxable activity. And minus that, it will be the C2, and then the C2 calculation I shared with you. So, my dear friend, the ITC balance reconciliation with the GST payable vis-a-vis the books of accounts, vis-a-vis the ITC register, all these should be in a sync, so that there should not be any mismatch, there should not be any gap, that, okay, all the entries are duly reconciled. My dear friend, the next one is about the closing advances, about the liability and the adjustment. So, my dear friend, you are aware that in case we have certain closing balances, and in the case of a closing balances, I will be discussing about you the ITC, this 180 days requirement, but just to share with you that in case you have certain closing balances and you have certain liability or certain adjustments are required which are related to the GST, that's the very, very important point that you need to be aware with, you should be aware with. Say, for example, there are the liquid, you are keeping certain money as a security deposit. So the proper journal entries, proper necessary entries should be there. Otherwise, there may be a case that, okay, if somebody will say that, okay, you have not paid to the supplier, and meaning thereby you have to reverse the credit. So that is something that in case you have certain liabilities, certain adjustments are required. The another aspect is about the advances received. So in case of a goods, advances received for the goods, there is no challenge. But in case of a services, if the advances are received and the invoice is still yet to be issued for the services provided, then certainly you have to see that, okay, that you are complying with the GST requirement, that, okay, you have to pay the GST on such advances received. My dear friend, the 16th point which I wish to share with you is about the creditor aging. You are aware that the section 16 talks about a proviso wherein if you have not paid to the supplier within 180 days from the date of invoice, then you have to reverse the credit, or in case you paid proportionately, then you have to proportionately you can retain the credit, and the rest of the credit you have to reverse. And now a recent budget also see the amendment when they talk about that even the proportionate payment will not suffice. You have to pay the full amount, then only you are eligible to claim the credit. Otherwise, you have to reverse the credit within along with the interest in case the payment is not made within 180 days. So, my dear friend, I will request all of you to see that the ITC register not only carrying the date of invoice but also the date of payment. And you have to see that all the creditors which are available in your books of accounts, in your balance sheet, their aging should not be more than 180 days from the date of invoice. And otherwise, if that is the case, you have to see that whether proper reversal you have made by the date, by the 31st March or not. And in case that is not there, you have to pay with the interest. My dear friend, there will be a requirement that the related party transaction as given under section 15 with the rules, read with the rules 28 to 36, that all the related party transactions should be dealt separately in a different way as compared to the normal transaction. So there will be a requirement that in case you are dealing with a related party, even if you are supplying free of cost, then also that may attract the GST. So we have to see that when we are finalizing the balance sheet, when we are preparing the notes or otherwise, that who are all the related parties. And in case there are the transaction with the related parties, and if that is not an arm length price, which should be there as given in the rule 28 to 36, then it is very, very important for all of us that the related party transaction vis-a-vis the arm length price should be evaluated, and under the valuation provision, and the necessary journal entries, necessary adjustment, necessary payment of the GST should be there along with the interest before finalizing the balance sheet. My dear friend, as you are aware that we have to, as I mentioned you, the QRMP scheme, the QRMP meaning thereby that the IFF, you are filing your return on a quarterly basis, but you have to pay the tax on a monthly basis. But in case you are opting for that, then you have to opt before 30th of April. So my dear friend, the assessees whose turnover is less than 5 crore, they are looking for a QRMP scheme. They have to, they look for only the IFF upload, something like that. Then they have to opt by 30th of April. That is something that I missed earlier, but I try to share you here. The next one is about the compliance related to the GSTR 04. That is the composition scheme. In case you are in the composition scheme, you have to file your return by 30th of April, something that need to be noted by each one of us. And finally, the last point is about the cross charge. My dear friend, in case you have the head office and the various branch offices are there, head office is providing certain services and they are getting reflected in the financial statement of the branches, individual trial balance of the branches that of the services are being received, but on which the GST charges, GST is not getting impacted, meaning thereby there is a requirement that the cross charge billing should be there from the head office or the branch as the vice versa, and on which the GST should be charged, but not has been complied with. So you have to see that whenever there are the inter-branch transactions are there, the head office to branch or branch to branch, any inter-branch or any transaction between the head office and branch is there, that should be adhered with the cross charge requirement, and then only the compliances of the GST will be completed. So my dear friend, these were the 20 points. I am aware that you are all busy on the, today is the festival day, today is the Ram Navami, we have the Navratras Puja, and you are about to complete your this all balance sheets requirement. The bank audits are just on the verge of starting. So I just, on the request of the team Taxo, I just try to cover in 30 minutes time that all the 20 requirements you should be aware of. We discussed many things, with some of them are there that, okay, you have to see as a compliance towards the department that, okay, when you are, what you have to do. For example, you have to intimate for the e-invoice requirement. You have to see that the LUT is getting filed, the composition scheme get adopted. Invoice series, in case there is any change, you are intimating, or the HSN requirement and the rule 42, say for example, you are claiming the credit on the proportionate basis. But at the same time, I discussed you many things about the reconciliation of the books of accounts vis-a-vis the GST records, so that when you are finalizing your balance sheet, it is complete balance sheet. As far as the GST is concerned, there is no lapse or the gap as far as the compliance of the GST is there. So my dear friend, this was all from my side. In case you have any question, I am here to take the question. Else we can conclude this session because it is a very brief and a crispy session. I try to make it so that we can have a quick overview of the last date compliances which we should be following with. Thank you very much, Kajal ji. Thank you very much, the team Taxo.
Thank you so much, sir. Any questions? With that, we come to the end of this wonderful session today. I hope you all found the session informative and insightful. I would like to thank C. Atul Gupta sir for his time today and for sharing his wonderful insight with all of us. It has been an honor and privilege to have you all with us. Have a great evening. Thank you so much.
Kajal, I believe we have received a question.
Yes, sir. Can you please explain the 10th
No, I'm just... Yeah, can you please explain the 10th point? I just checked which 10th point I covered. The 10th point is builders RCM 80% payment by 30th of June. My dear friend, as I mentioned you that in case you are a builder and residential project you are doing, then not only the rate on the output tax is predetermined that, okay, in case of an affordable house, it is 1%, and in case of a normal house, it is 5%. But also there is a mandate under the law that you have to purchase from the registered dealer. You have to purchase from the registered dealer up to 80% of your purchases. And in case if that is not there, then you have to make up the gap by paying the tax under the reverse charge mechanism. So say for example, my total purchase is 100 crore. I purchase 75 crore from the registered dealer and 25% crore from the unregistered dealer. In that case, to make it up to 80%, on the 5 crore, I have to pay the tax at the rate of 18% under the reverse charge mechanism. By 30th of June, that is something that I try to cover you, that okay, you have to pay 90 lakhs rupees under that. As far as the Pavitra Balaji is talking about, explain the point number 3 related to the exports. As I mentioned you, Balaji, that there are the two ways that we are filing doing an export. One is that against payment, meaning thereby I am charging against the exports on the output liability, and then I am claiming the refund of the output liability, whatever the tax I paid on the output vis-a-vis the input as well, both. The another way is that I am filing a LUT before the department, and in that case, I will not pay any tax on my output and I will claim the refund of the input tax credit which is available in my books of accounts. So I am saying in case you have to file the LUT, the LUT facility has been started by the department for the next financial year, which you can file today itself. So that in case you are doing export tomorrow, that on the 1st of April, then you need not to wait that, okay, LUT is pending. Now, my dear friend, the e-way bill, we were talking about that the e-way bill 4 points of e-way bill 4 point of section 16 claim ITC. I'm talking about the Balaji. I'm talking about this e-way section 16 ITC. I covered 3 points of ITC. One was about the reversal of the credit in case you are dealing with the taxable and exempted activity. I discussed about the reversal of the credit in case of an asset or the stocks write-off. Which one you wish to discuss? Please mention on the query. So I just wish to answer you, maybe I can answer both of the question, that in case of a rule 42, I mentioned you that in case you are dealing in the taxable and exempted both activity and you are reversing the portion of the common credit related to your exempted activity on a monthly basis, then the ratio which you will follow to reverse will be the monthly turnover. But in case the monthly ratio do not match with the annual ratio, after the end of the financial year, then you have to do an adjustment entry either to claim more credit or to reverse the credit further. So that transaction, that adjustment you should do on the 1st of April itself, because otherwise that will attract the interest liability. The other aspect I mentioned you about, in case of any write-off of the asset is there or stock is there, then you have to pay. Say for example, you purchase an asset for 50,000 rupees. You enjoyed 9,000 rupees as ITC. Now you are selling that asset after 2 years. Meaning thereby the 40% credit you can retain, 60% you have to reverse, or the transaction value whichever is higher. So that adjustment entry also you need to take care while you are finalizing your balance sheet. Now Gurjinder Singh has a question, sir. As we have discussed the point of month-wise reversal of ITC, what will be the case of a capital goods ITC? No. Gurjinder ji, just to share with you, for the ITC reversal related to these capital goods, that falls under the rule 43. And under the rule 43, it is not the requirement, because that will continue on a year-to-year, month-to-month basis. So that is not required for the purpose of the capital goods, that okay, you have to do an annual adjustment entry. Suppose my entire sale is totally tax-free, but annual basis my ratio comes to taxable 25 and tax-free to 75. So I just wish to share with you, in case of a rule 42, if your annual ratio comes only 25% taxable and 75% exempted, in that case, whatever the credit you have claimed for the entire year, you have to reverse the 75% of that immediately on the 1st of April. Otherwise, the interest meter will trigger. So it's very, very important, Gurjinder ji, for you to learn this aspect, specifically in relation to the normal credit. That is a credit related to input or input services. Now, as far as the capital goods is concerned, now you have to follow the rule 43 also, because you have certain exempted activity. So that is also a requirement which you have to follow, as we discussed. The e-way bill reconciliation or the e-invoice reconciliation, which Prithvi ji, Pavitra ji, Balaji is asking, that I mentioned you that in case you have the IT stock register. On the stock register, you have all the purchases, but you have to see whether you have actually the e-way bills available against those purchases or not. So there will be certain purchases wherein the e-way bill is not applicable. No problem. You have to see that, okay, wherever it is applicable, wherever the purchase is more than 50,000 rupees or something like that, or in case of an interest rate, it is applicable for every amount, then all the e-way bills should have been there, or whether they are available or not is something that need to be learned. Now, can you explain the GST refund process for inverted tax structure? Levinji, today topic is about the, so what I will do, I will request you, Wilsonji, that you just write a mail to me on atulservicetax@gmail.com, atulservicetax@gmail.com, and I will give you the refund process which you are talking about, because that will be a topic which everybody will not be interested, because today is very, time is very precious for everybody because of the year end closing, and everybody is looking only for a limited aspect that, okay, they wish to learn. So that I will explain you on a offline through the email. I believe I answered, what is your name? Kajal. Kajal, I answered all the questions, whatever there in the chat box. I believe one more question came, I thought. Let me check.
Yes, sir.
Can we use ITC of capital goods for the starting month of business? Yes, you can use the 100% of the capital goods credit, as I mentioned you in the rule 43 many times, that for capital goods, you can claim the 100% of the credit related to the capital goods on the day one. And then you have to reverse on a monthly basis with interest along with the ratio of your turnover. So month to month, you have to calculate your turnover of exempted taxable, and then you have to reverse a portion of that. So it will go like this, that you will reverse the credit of your exempted turnover on a month-to-month basis for the next 60 months. So maybe we can do something like we can do a practical illustration some other time, and that may help you to understand the rule 43 much better. Kajal, I believe the questions are complete.
Yes. Thank you so much, sir, for your time today. I would like to thank all the audience with us.